Banks don't want you to know these 10 top secrets. Banks are institutions we rely on to keep our money safe and help us manage our finances. But what if I told you that behind their polished advertisements and customer-friendly branding lies a series of secrets they'd rather you not know? These secrets can cost you money, keep you in debt longer than necessary, and limit your financial growth. Today, we're pulling back the curtain on 10 things your bank doesn't want you to know. By the end of this video, you'll not only understand these hidden truths, but also learn how to use them to your advantage. Stay with me because you don't want to miss these insights. They could save you thousands of dollars and transform the way you approach banking forever. Secret 1. Banks profit from your ignorance. Banks thrive on customers who don't fully understand their services. From high fees on overdrafts to hidden charges on loans, the less you know, the more they profit. Did you know that banks often rely on small print to include terms that can significantly cost you? For instance, many people sign up for accounts or credit cards without fully reading the terms, only to discover later they've been hit with fees they didn't anticipate. Take overdraft fees as an example. Many banks encourage customers to opt in for overdraft protection, claiming it's a safety net. In reality, this often results in hefty charges every time you overdraft your account, even for a few dollars. Overdraft fees are $1 billion industry for banks, and most of it comes from customers who aren't aware of better options. To combat this, you need to take control. Always read the fine print, compare fees across banks, and consider alternatives like online banks, which often have lower fees and better transparency. Knowledge is power when it comes to your finances, and staying informed can help you keep more money in your pocket. Secret 2. High interest rates keep you in debt. Credit cards, personal loans, and even mortgages are structured to benefit banks more than you. One of the biggest ways they profit is through high interest rates, especially on credit cards. The average credit card APE is often over 20%, meaning if you only pay the minimum balance, you're handing over a significant portion of your hard-earned money to the bank each month. For example, if you have a $5,000 credit card balance at a 20% interest rate and only pay the minimum, it could take you over 15 years to pay off that debt, and you'll pay thousands in interest along the way. Banks design these payment structures to maximize their profit while keeping you in a cycle of debt. The solution? Pay more than the minimum whenever possible and prioritize paying off high-interest debt first. Consider consolidating your debts into lower-interest loans or transferring balances to cards with 0% APE introductory offers. Just be sure to pay off the balance before the promotion ends. Secret 3. Savings accounts aren't as great as they seem. Banks love to advertise savings accounts as a great way to grow your money. While it's true that savings accounts are safer than keeping cash at home, they often come with interest rates so low that your money barely grows, especially when compared to inflation. For instance, if your savings account offers an interest rate of 0.01% and inflation is 3%, your purchasing power is actually decreasing over time. Banks use your deposits to make loans and investments that earn them significantly higher returns while offering you the bare minimum in interest. Instead, consider high-yield savings accounts or money market accounts that offer better returns. You could also explore other options, such as index funds, which historically outperform regular savings accounts over time. If you're finding these insights valuable and want to learn more about how banks affect your finances, check out our video titled "Banks Are Costing You Money. They Are Not Your Friends. Be smart." You'll find the link in the description below. Don't forget to like this video, share it with someone who needs to hear these truths, and subscribe to the channel for more tips to take control of your financial future. Secret 4. Hidden fees add up quickly. One of the biggest ways banks quietly take your money is through hidden fees. These include maintenance fees, wire transfer fees, foreign transaction fees, and even inactivity fees. Banks often bury these fees in their terms and conditions, knowing that most people won't read the fine print. Imagine withdrawing cash from an admin only to discover later you were charged a $3 fee for using an out-of-network machine. Do this a few times a month, and you're losing money that could have been saved or invested. Pay-in fees are another example. Many checking accounts require a minimum balance to waive the fee, but fail to clearly communicate this to their customers. To avoid these fees, review your account's fee structure and make adjustments. Choose accounts with no monthly fees or low admin fees, and always look for banks with transparent fee policies. If your bank is charging excessive fees, consider switching to an online bank or credit union that offers more customer-friendly terms. Secret 5 loan terms are designed to benefit the bank when you take out a loan, whether it's for a home, car, or personal use. The terms are often designed to maximize the bank's profits. This can include higher interest rates for longer repayment terms, prepayment penalties, or mandatory insurance products that increase your total cost. For example, a 30-year mortgage might seem appealing because of its lower monthly payments, but over the life of the loan, you'll end up paying significantly more in interest than with a 15-year mortgage. Similarly, personal loans may come with origination fees or high APRs, making them far more expensive than they initially appear. To counteract this, shop around for the best loan terms and use comparison tools to understand your options. Pay off loans early when possible to save on interest, but make sure there are no penalties for doing so. Being an informed borrower is one of the best ways to save money and minimize the financial burden of debt. Secret 6. Banks invest your money and reap the rewards. Did you know that banks use the money you deposit to make investments and generate profits? They lend your money to other customers through loans and mortgages, often earning significant interest while paying you a fraction of that in return. For instance, a bank might lend money at a 5% interest rate while only offering you a 0.5% interest rate on your savings. The difference, known as the spread, is pure profit for the bank, and yet most customers aren't aware of just how little they're getting in return for letting the bank hold their money, instead of leaving large sums in low-interest accounts. Consider investing in options like index funds, mutual funds, or real estate investment trust REITs. These options have historically higher returns and can help you grow your wealth faster than traditional savings accounts. Secret 7. Credit card rewards aren't always worth it. Credit card companies often lure customers with promises of cashback, points, or travel rewards. While these perks can be beneficial, they're not always worth it if you're carrying a balance or paying annual fees. Banks profit heavily from customers who overspend to earn rewards but fail to pay their balance in full. For example, if you spend $1,000 to earn $50 in cashback, but don't pay off the balance, the interest you'll accrue could easily negate the reward. Additionally, many rewards cards come with high annual fees that only make sense if you're a frequent spender who can fully utilize the benefits. To make the most of credit card rewards, only spend what you can afford to pay off in full each month. Avoid cards with high fees unless the benefits outweigh the costs, and always read the terms carefully to ensure you're not losing money chasing rewards. Secret 8. Banks don't prioritize financial education. Despite their role as financial institutions, banks rarely prioritize educating their customers about money management. Why? Because informed customers are less likely to fall into debt, pay excessive fees, or rely on high-interest credit products, all of which are major profit sources for banks. Many people turn to their banks for advice on savings, loans, or investments, but often end up with biased recommendations designed to sell the bank's products. For instance, a bank advisor might recommend a mutual fund that comes with high fees instead of a lower-cost index fund because it's more profitable for the bank. To counter this, take charge of your own financial education. Use free resources like books, podcasts, and YouTube channels to build your knowledge. The more you know, the better equipped you'll be to make decisions that benefit you, not your bank. Secret 9. Free services often come with a catch. Banks frequently advertise free checking accounts, credit monitoring, or other services, but there's often a catch. These accounts may require you to meet certain conditions, such as maintaining a high minimum balance or setting up direct deposit to avoid monthly fees. For example, a free checking account might suddenly charge you $12 a month if your balance falls below $1,500. Credit monitoring services might be offered as a free trial, but automatically enroll you in a paid subscription unless you cancel. Teaser tactics are designed to lock customers into paying fees they didn't expect. Always read the terms and conditions before signing up for any free service. If you notice unexpected fees, don't hesitate to call your bank and ask for an explanation or even request a refund. And you're not stuck with one bank. Many people feel a sense of loyalty to their bank, even when it's costing them money. But the truth is, you're not obligated to stick with a bank that doesn't meet your needs. Banks rely on this loyalty to avoid losing customers, even when they're offering subpar services or high fees. Switching banks can seem like a hassle, but it's often worth it. Look for banks that align with your financial goals, whether that's lower fees, higher interest rates on savings, or better customer service. Online banks and credit unions are often excellent alternatives to traditional banks. Remember, your bank should work for you, not the other way around. Don't settle for less just because it's convenient. Take the time to research your options and choose a financial institution that truly has your best interests at heart. By now, you've learned some of the critical ways banks profit from your lack of knowledge, from hidden fees to low-interest savings accounts. But this is just the tip of the iceberg. In our next video, banks are costing you money. They are not your friends. Be smart. We'll dive deeper into how banks manipulate common financial behaviors to their advantage and what you can do to outsmart them. Stay tuned, because we're going to uncover strategies to take control of your financial future and stop being just another cog in the banking machine. Don't miss it. Your transformation starts with knowledge, and it continues with action. This video is for informational purposes only and does not constitute financial advice. Always consult with a financial professional before making any significant financial decisions.